What's up, my mind, your money business folks? It's me yet again with another video on today's stock market. And it says, stocks are sinking. To start the final trading week of 2024. We're in the last few days of the year, people, and stocks are down. So let's see what's going on in the stock market. First of all, hopefully you guys are having a blessed, good day. You had a good Christmas holiday. The New Year's is in a few days. So it says here, stocks fell on Monday, right? With the woes of the three major indexes continuing in the final week of the year as an otherwise strong 2024 comes to a close. The benchmark S&P 500, the tech-heavy NASDAQ Composite, and the Dow Jones Industrial Average were all off by about 0.6%. Stocks moved lower as the 10-year Treasury yield retreated from a 7-month high to hover near 4.55%. Stocks closed out last week with a Friday slide from big tech names like Tesla, Nvidia, and the NASDAQ Composite falling 1.5%, and the S&P 500 down over 1%. The highly anticipated Santa Claus rally, which is statistically one of the most consistent 7-day positive stretches of the year for the S&P 500, has flopped thus far. Flop, people. Since 1950, the S&P 500 has risen 1.3% during the 7 trading days beginning December 24, well above the typical 7-day average of 0.3%, according to LPL Financial Chief Technical Strategist Adam Turnquist. In the current period, though, currently, the S&P 500 is down nearly 1%. Yeah, it's down, people. With just 2 days left of trading, markets are hoping to recapture the momentum of this year's gains. The benchmark S&P is up over 25% in 2024. It's up over 25%, people. Despite this week closing out the year isn't the best, it's still up over 25%. Unless you're a business owner that has outperformed the S&P 500 or a great stock you might have invested in and some other funds. Either way, the S&P 500 has gained over 25% this year. So let's just say, for an example, where is my... Hold on for a second. Okay, I'm back. Had to get my calculator, right? Just to give you an example, let's just say you invested $14,325 into the S&P 500 this year. Right now, your balance would be $17,906, right? That's a gain of $3,581. Say if you had left that $14,325 in your bank account, you wouldn't have you wouldn't have $17,000, almost $18,000 in your account, right? So again, I'll take that 25%. So again, the S&P 500 is up over 25% in 2024, while the NASDAQ has increased over 30%. My information technology ETF is up over 30%. let's take that same 14,000. Let's say you didn't invest the $14,325 in the S&P 500, but you invested it into a good information technology ETF that's gained over 30%. Let's say 30%, right? You will have $18,622. That's a gain of $4,297.50. And let's just say you continue to do that year over year. Will the market bring back 25 and 30% every year? No, it may bring back 10% next year, 15%, or 21%. It changes, it fluctuates, 9%. But on average, over the last 100 years, the S&P 500 has brought back over 10%. So either way, it says here, in a separate development, the New York Stock Exchange and the NASDAQ announced trading will close on Thursday, January 9th, for a day of mourning for former President Jimmy Carter, who died on Sunday at the age of 100 at his home in Plains, Georgia. He lived a long life, a very long life. Again, I'm going to click on my information technology ETF, FTEC. Let me see, give you the actual gains for year to date. Year to date, FTEC, 30.67%, like the article said. SPLG, my S&P 500 ETF. Year to date returns, well, it's down right now to 24.31%. Almost 25%, people. Yeah. So that's what's going on in the market. It will be open for another 45 minutes. Everything is down. Well, not everything. Tesla's down $9.64. Closing could go down more. Broadcom is down $5. Apple's down over $2. Palantir's down almost $1. Serve Robotics almost down $1. SMCI is down over a little over $1. So yeah, things are down. Nvidia, on the other hand, surprisingly, is up over $2. And I will say, because of Nvidia, my portfolio this morning is green. Even though the market was down on Friday, big tech stock names like Nvidia and Tesla, there were other stocks that did pretty well on Friday, and that kept my account in the green as well. When you minus the losses plus the gains, I was in the green. I gained money on Friday. Right now, currently, I'm in the green. But in the next 40 minutes, 45 minutes, things could change. Nvidia could go from green to red just that quickly, right? I've seen it happen. But right now I am in the green. That's why it's important to diversify your portfolio. I would not have all my money in a single stock like Nvidia, like Tesla, like Apple. I mean, to me, that's not smart. Diversify your portfolio. If you have all of your money in an S&P 500 because that's what you feel most comfortable with, that's okay. Because within that S&P 500 ETF like mine, SPLG, there are 500 companies. So you're really invested in the 500 largest companies in the United States. So that is a very diversified fund to have. And you don't have to manage it. You don't have to worry about picking a good single stock. Say you're trying to figure out which stock should you invest in. Should you invest in Nvidia? Should you invest in AMD? Should you invest in Broadcom? I mean, your budget may be limited. You may not be able to buy all three. You don't have to. Just buy the S&P 500 because majority of these single stock companies are part of the S&P 500. I think you have to have like a market cap of like at least $100 billion to be a part of the S&P 500. But Google it, look it up first. So a lot of the companies that are a part of the S&P 500 are successful companies. And if they no longer are successful, the managers of those funds will simply remove that company out of the S&P 500 and replace it with another. It happens all the time, right? All right, so I'm going to end this video here. Again, hopefully you guys are having a blessed day. My day is just beginning. It's morning time here. And again, the stock market will be open for another 44 minutes. Hopefully you guys are investing. You're doing something. You're lowering your debt to income ratio. Look at my other videos, not talking about the stock market, talking about the financial state that a lot of Americans are finding themselves in. The most recent video that I posted, if not the most recent, but the one where I talked about investing is psychological, because you need to understand money, and you need to understand your feelings and your thoughts behind money, and the reason why you're not taking advantage of investing, the reason why you're not saving, the reason why you don't have enough, the reason why you're living above your means. Everything is psychological. And when things are psychological for a lot of people, then the action that they take involves their feelings, you know. And when you get your feelings involved, I believe your feelings, in my opinion, is what drives the direction you go in life. It takes you that way or that way, you know. So get control of this. Mind your money business, people. So yeah, so like, comment, subscribe, share this video. Let me know what you think, if you think anything at all, because hopefully you are thinking. Disclaimer, I'm not a financial advisor, nor am I trying to pretend to be one. I'm just someone on YouTube talking about the stock market. So everything within my videos and on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your money if you're not comfortable doing it yourself. Create a budget, lower your debt to income ratio, live below your means. In that video where I talked about investing in psychological, I gave you 2 examples of someone who lived a modest life, who had no college education, and when Ronald Reagan passed away, he had over $8 million from working as a janitor for 17 years at JCPenney's and being an auto mechanic for 25 years. And where he compared his life to someone, I believe his name was Richard Fuscone, who worked for Merrill Lynch, who went to Harvard, who had a master's degree, who retired early, but then upon his passing, he had nothing because he didn't invest wisely. He didn't control his feelings and his money. And boom, an emergency happened, things happened, the market crashed, he lost it all. Slow and steady wins the race. We live in an environment and in a world now where everything is so instant. It's almost like popcorn, like microwavable popcorn. Because of technology, you can see me. I don't know where you are in the world, but at any given time, someone in Africa, Asia, Europe, someone in the United States or Canada can see my video real time. If I choose to get on a plane and go to Hawaii, if I choose to get on a plane and go back to the Middle East, go to Africa, go to somewhere in Asia, I can video that and show you real time. And so because of that, I believe it has skewed people's way of viewing the world, thinking that they need what they're seeing others have right now. But what I'm trying to tell you is that you don't see that gap in between those other people who are showing you their experiences. You don't see the work that they put in. If it's legitimate, if it's not just a front and some person's actually putting themselves in debt trying to show off and be something that they're not. But if they're legit and they're showing you their lives and they actually have the means to do what they're doing, they're not going into debt, you can't do what that legit individual is doing if you're not there yet. You have to put in the work. And oftentimes, we don't see the work, we just see the end product. So that's why you need to control this. It doesn't matter if you're young or old and you're seeing a younger person than you have these sort of experiences. Stop comparing yourself. Stop putting in the work. And you'll see how hard it is to do what those people are doing, those legitimized people are doing, right? Not some fake. You'll see that it's not easy because you're going against your old programming. I'll say I work in communications. So it's like, what frequency are you on? What are you communicating on? It's like the channels on your television. What news channel do you listen to? What radio channel are you tuning to listen to? And if you ever think about it, whatever it is that you're listening to and whatever it is that you're listening to, whether it be television, news, a movie, or music, it makes you feel a certain type of way. So what are you tuning into? What frequency are you tapping into? Whether it be that radio station's frequency, that news outlet frequency, you need to start controlling your frequency. You may need to create your own channel by turning off the TV. Sometimes turning off the radio, because those things are what's driving you, for a lot of people, because it's psychological, to feel a certain kind of way. It can stop you in your tracks. It can make you upset. It can make you want to hurt yourself, hurt other people. It can scare you to not even make moves at all. So, yeah, start tuning into another frequency, people. And when you decide to do that, that's not easy as well. I mean, it's not easy. It's not easy trying to changing. It's not easy to change the channel because you're so accustomed to hearing and seeing the world a certain way, and now that you're trying to see it differently, your old programming is going to fight that. So in the midst of changing, if you don't feel crazy during that time, then you're not doing it right. You're not changing the channel correctly. You should have a feeling of discomfort whenever it is that you're trying to change about yourself, whether it be investing, getting more healthier, getting a better job, getting out of bad situations, letting go of bad people. It's going to make you feel a certain type of way. And so, most oftentimes, in my opinion, from my experience, it's not a comfortable or good feeling. So, yeah. All right. So, again, I need to end this. Peace.